What's the latest on President Trump's views regarding the Federal Reserve and interest rates?
Hadriana Lowenkram reports that Trump anticipates his future Federal Reserve chair to decrease interest rates if the economy performs well. This indicates his preference for a nominee committed to interest rate cuts as he approaches the selection to replace Jerome Powell. He believes lower rates could help the housing market.
The article mentions a disconnect between good economic news and market reactions. Could you elaborate?
Trump observed a shift from the traditional market response, where positive economic data led to market increases. He noted that nowadays, such news often results in market declines due to concerns that the Federal Reserve will raise interest rates to combat potential inflation. However, there are exceptions. For example, the S&P 500 rose despite a higher than expected GDP increase.
What do experts say about this paradox?
Marshall Front from Front Barnett suggests this good news is bad news dynamic isn't new. He anticipates that market fundamentals will eventually drive interpretations, emphasizing the importance of a strong economy in supporting corporate profits. To summarize, the president is seeking new leadership at the Federal Reserve to lower borrowing costs, particularly as he faces political pressure related to affordability concerns among voters. This is all happening as he is looking to narrow down his list of potential nominees.
Thank you for the update. Can the Santa Claus rally boost stocks in 2026?
Crystal Kim's analysis suggests that if the Santa Claus rally occurs, investors might see positive results into 2026. Historically, this rally, which takes place over the last 5 trading days of December and the first 2 of the new year, has correlated with stock gains.
How significant are these gains and what factors contribute to this phenomenon?
Invesco's research indicates that the average gain during this 7-day period has been around 1.3% since 1950, which is better than the average return for typical 7-day periods. Some believe the festive atmosphere and reduced institutional trading activity drive this rally, potentially allowing retail investors to have a greater impact.
Beyond just a seasonal trend, does this rally have implications for the market's overall direction?
The rally is viewed by some investors as a market indicator for the upcoming year. Jeff Hirsch suggests that a strong rally could signal a bullish market. Hirsch also looks at the first 5 days and the January barometer as indicators. Historically, a positive Santa Claus rally combined with positive results from those 2 indicators has correlated with a positive year for the S&P 500 about 90% of the time. It's important to remember that the Santa Claus rally is not a guarantee, and market performance can vary, but historical patterns offer interesting insight.